Let's move on now and get in Salil Desai of Marcellus Investments also in the discussion. Salil, good afternoon. Thank you very much for joining us. A very interesting note from your team which caught our attention, and we thought of having this discussion, the rise of the Octopus class. Yes, that's correct, viewers. Marcellus, along with Salil, has come out with a very interesting note, taking note of how the demographics of our country are taking shape. And within that, there are about 1 million individuals which are making their spending muscle felt. Yes, 1 million individuals, about 200,000 super rich families. These super rich families, due to various factors, financialization, asset sales in their family companies, variety of factors are actually driving affluent category consumption, and that's what Salil and his note is being called as the Octopus, rise of the Octopus class. There was a very famous movie, Salil, Crazy Rich Asians, and your note is talking about Crazy Rich Indians. Tell us what categories where you think high growth potential exists and hence should be reflected in portfolios to capture that.
Right. Thanks for having me. So my colleagues Nandita and Saurabh wrote this report, and this has been based on some data that we crunched as well as what we saw on the ground from our travels. Right, a lot of anecdotal evidence. So what we are seeing clearly is there is a divergence in consumption between what you could popularly call as mass consumption versus class consumption. Right? So things which are premium, things which are luxury, they are selling more. This is a larger class of people who have greater spending power, and their spending consumption, their spending power will be seen in some of these luxury items. So some examples again from the report that we have cited are on jewelry. Let's say Titan. Right, we are seeing that diamond jewelry, right, wedding jewelry. The ticket sizes are growing. The footprint, in the sense that the new, what we earlier thought would have been largely urban consumption, we are seeing more and more tier 2-3 cities seeing the surge there. We are seeing in two-wheelers, right, again a space that we like, especially on the premium bikes. So we are seeing that with Royal Enfield and Eicher. We are seeing in case of hospitals, Rainbow Children's Hospital is something which we own. There again, we are seeing people ready to spend more for pediatric care as well as for childbirth and maternity care. So in a lot of these segments, we will see clear divergence in what would earlier been thought as essential spending, and today what we think is more like luxury and high ticket spending. We are reorienting our portfolios based on partly some of these themes, which is also, again, just to kind of inform you, part of a broader theme that we are playing called VESCO, which is women, education divergence between men and women. Then we are playing on Southern India versus the rest of India, China +1, and Octopus. So that's how the broad theme is playing out.
Understand the longevity of this. Yes, luxury cars are selling more. Luxury retail is doing very well in same store, while mass retail is struggling. I want to understand, is this a structural theme which may have more legs for next few years, so that those companies which are beneficiary of that may have good runway of earnings growth? Or as of now, this data is supportive, we'll review it in the next few quarters?
So this is certainly not a next few quarters theme, right? The way things have changed, right? So to give you an example, if there was a small trader in some small town in India, what has happened is that these guys used to do business conventionally, right? A lot of it maybe informally. After demonetization, GST, these people have come into the formal channel. Now, the smarter lot of these people, what they've done is they've tried to use the formal banking channels to expand their businesses. So they have grown by leaps and bounds. Whereas the people who did not take advantage of these structural changes that have happened in the economy in the last 5-7 years, they have kind of been left behind. So we think that these structural changes will actually lead to kind of longer term play out of these themes. Definitely not for the next 2 or 3 quarters. So long runway to go, yes.
That's interesting. How is the margin profile of this affluent class portfolio looking? Does it have a superior margin profile as well? and also operating leverage. As the numbers increase, because you are talking about a big number, then do you think that benefit also flow in lower?
Definitely. Yeah. So, see, most of the companies that we would want to, or we would look to invest in as part of this theme is that there is already kind of a base business, right, which is the bread and butter. So operating leverage, is on top of this. All of these companies have certain categories of products or offerings which cater to this, this class of super rich Indians, as we call them, and kind of this is over and above. It's like the cherry on the top, right? So the operating leverage and all comes specifically from the fact that you have base business which is taking care of most of your expenses, and then you have on that a kind of creamy layer, so to say, which kind of lends you a greater volume growth, and obviously because of that, there's going to be operating leverage. But the way to think of this is more from an return on capital employed point of view. So, for example, in case of say luxury cars, right, you would see that even the cost of making these cars is higher than a mass transport car. So the real metric is whether for every rupee that you've spent in building a plant and distribution and so on, are you making equal or better returns than you would do in any product. So typically these are not necessarily things which should be either more profitable in that sense, but what it is doing is that you're catering to a very specific niche that is coming up. And there's great opportunity to make money by just catering to that niche.
Okay, one last question, Salil. I want to understand, we understand that premium is growing higher. We understand that premium related products have a much bigger market in India. In fact, equal to many countries, size of the economy themselves, right? But are the valuations not pricing in to a large extent? I want to understand, are we landing up buying more expensive stuff as well? Is that a risk at least?
See, valuation, you'll have to look at each company on a case-by-case basis. There are three key elements in each of these, right? So one is, like you also mentioned, whether the runway is long. And a lot of stocks would factor in that these are more shorter-term phenomenon, not a structural change. And the longer your cash flows are going to grow, there's room for higher valuations. Second is whether each of these companies have any dominance, right? Are you just another luxury car seller, or are you doing something which is different from your competitors? All right, so competitor advantage, which eventually reflects in the returns that you would make, right? And third thing is the pace of growth, right? So all these three elements put together will eventually lead to a kind of dive into the valuation question. There will be stocks where you might not see too much value, but in a lot of these cases, we think that there is enough runway for growth, enough room for ROCEs to expand, and the pace of growth to actually accelerate. So that would in a way justify valuations for many of these names. And just to kind of give you a disclaimer, myself, my immediate relatives, and clients of Marcellus would own some of the stocks that I have mentioned here.
Right. All right, Salil, we'll let you go on that one. Yes, that's a standard disclaimer. And whatever stocks spoken are only for example purpose, not any recommendation. Thanks very much for your time today.
Pleasure. Bye-bye.